Time, that opening gong this Monday morning, and what's in it for the markets? Well, we've gotten off on the back foot this time around, so we've gotten off to a bit of a tempered start on the index as we speak. You've got the broader end of the market too, which will be in focus, so keep an eye out on what's going on with the mid as well as the small caps. I just want to check in on some individual names as well. Do remember, you've got those OMCs that are going to be in the limelight. Remember, they have in fact declared a force majeure on the crude prices from the Middle East after the fuel demand has plummeted. You've also got a whole host of other stocks. SBI, remember, we just spoke to Mr. Kara as well, talking about passing on the benefit of the lending rate cut, cuts. They've cut the lending rates by about 75 basis points. Sun Pharma as well in the limelight. The US FDA classifying the Halol facility as an OAI. You've also got Tata Motors hiving off their passenger business. Something like NTPC as well in the limelight. Remember, CLSA has maintained a buy, saying that the M&A is only adding to the overall EPS growth. You've got Lupin as well in the focus, as they, along with Mylan, they have announced the positive European Medicines Agency for the approval of certain drugs as well. A whole host of other stocks, the likes of Motherson Sumi. Remember, Moody's has assigned a BA1 corporate family rating there. So those are some of the other newsmakers in today's trading session. But for our own markets, in fact, as we speak, it's looking a little bit tempered this morning, Nikunj.
It's not like a scary start, but it's a weak start, given that we've had very little support coming from global cues, given that the virus globally is still spreading, and the numbers where they matter, which is US and New York and the financial district, it's not a panic mode, but yeah, the numbers are now increasing at a very large alarmistic rate, so to speak. So what is the right way of looking at markets? Markets, we always say that they are a forward-looking mechanism, which is that markets will always act, react, and adjust ahead of the actual occurrence. We know the economy has taken a hit, but have markets really factored in worst of the pessimistic scenarios? And is it a good time to construct portfolio, or one should be a bit wary because these are extraordinary circumstances? One should protect capital rather than conceiving the idea of investing in this kind of a market. Vetri, a simple and a straightforward question. Are we in a prolonged bear market for equities, or do you think now we are nearing the end of the tunnel?
Yeah, hi Nikunj. Two ways to really crunch this. One is, where are we in terms of valuations? I think the answer on that, when we look at multiple indicators, is that clearly it's dropped into attractive territory. But if I were to look, let's say, at some of the lows that we have seen for valuation in 2008, 2009, 2003, then it's not very clear to me that we've gone to lows close to that as yet. So I would essentially, as an equity investor, say the markets are clearly attractive from a long-term point of view, but it's still an evolving situation. So you need to keep some of your powder dry, and that's the way I would approach it.